Welcome back. We're continuing our Chapter 2 transaction series. Again, we're focused on doing journal entries, debits and credits. If it's been a while since you looked at the previous parts of this chapter, these videos, I would reference back to the end of the Chapter 2 Part 1 video that shows the natural debit and credits, because that's what we're really focusing on here. Here for transaction 4, we collected cash of $5,500 for service revenue. And so again, usually what I tell students is start with cash. Cash is something that students have obviously a good connection to because we use cash all the time in our regular lives. And it's also a debit side. And so we're okay typically with cash. And so I will start every journal entry that has cash, I'm going to start it with cash because I think it's easier to do that. Another thing I'm going to encourage you to do is, let's say this is early in your accounting career, obviously, and you're still figuring this stuff out. And don't be afraid to just do half the entry and then kind of figure things out. It took me a while in my first accounting class to kind of really grasp everything. And I know I can remember distinctly doing half of a journal entry and then just figuring out what else happens. And so it's always going to work. The rules are always going to be followed. We're always going to be doing things logically and consistently with the debit and credit rules. But here if you're like, okay, I know we collected cash at $5,500, so I know we're going to debit cash $5,500, and so that's a debit. Well, again, you're over halfway there because you know the next part of your journal entry has to be a credit for $5,500. And so then the matter is, what's the next account called? In this case, it's service revenue. You could have put revenues here. It wouldn't have been a big deal. Obviously, Connect is going to be a little, my accounting lab is going to be a little more finicky in terms of whether it's going to accept certain things, but you should be able to figure out what account goes here. The debit to cash, because cash increased, revenues also increased. Revenues have a natural credit balance. And so you can see we're increasing cash in our cash T account by $5,500, and we're increasing revenues in our revenue T account also by $5,500. Transaction 5 is similar to transaction 4 in that we did earn revenues, but instead of getting cash, we're going to get something else. Remember, there's a particular account we use in this circumstance. There's an account specifically purposed for when we sell something and don't get paid immediately. That account is accounts receivable. So in this case, accounts receivable, because it's an asset, is going to be debited for the $3,000, and we're going to do the same thing we did in transaction 4, which is credit service revenues for $3,000. And we can see our T accounts. Accounts receivable gets posted to the debit side because it's an asset, and that's an increase. Service revenues, because revenue has a natural credit balance, we're going to credit $3,000. Transaction 6. We're paying cash expenses on November 15th, office rent $2,000, employee salaries $1,200. And so here, because I'm so insistent on doing cash first, I'm actually doing the credit first. Most of the time when you're doing a journal entry, you want to do your debits first, but especially as you are a new student and just figuring this out, don't beat yourself up if you're putting the debits and credits on top or bottom. And this is something that you kind of figure out over time. As long as you're clear, whether it's a debit or a credit, I think you're on the right track. And here, I would probably do this part first. I would say credit cash $3,200, and then figure out what else you need to do. Okay, so if that's credited $3,200, I obviously need debits. And again, it works out. Rent expense is $2,000 because expense is a natural debit balance. We increase with the debit, and then we debit salaries expense. Again, same thing. Expenses have a natural debit balance, and so it works out. This is called a compound journal entry because it has more than two parts. Any journal entry with more than one debit or more than one credit is called a compound entry. Here we see everything posted. We see our cash gets a credit of $3,200 because cash decreased and it's an asset. We credit. And then both rent expense and salaries expense are expenses with a natural debit balance, and so they're increased. Also keep in mind that expenses are minuses in equity. So they're expenses. They're bad. They're something that the business wants to minimize as much as possible. All right, one more break before we go on to our second and third worksheets for this chapter. Hopefully you're making your way through this and it's not too painful. I know debits and credits and journal entries aren't always fun, but I think once you kind of get the method and everything figured out, there can be some logic and flow to it.